So something I've come across so many times in practice and that we've had to deal with in practice is when we have clients who are taking cash from their retirement funds, whether they resign or whether they retire or they were retrenched for whatever reason, and they were told they're going to pay X amount of tax, and then it turns out that it's completely different. So you can either take chances or you can sort of make sure about your facts, because doing the calculation up front is one thing. Having all of the information, I don't know about you, but I can't remember when I took money, how much I took, where I took it from, or any of that. And we think that clients would remember, but they don't. So now we add on the new two-pot system, and you can have saving spot withdrawals. Or component withdrawals rather. We throw that into the mix and it just becomes more and more complicated. And here's the other truth. Can we still ignore tax today when we are doing planning for clients? So I'm really looking forward to an interesting discussion today around all of this and give you some solutions of how you can avoid having tough conversations with clients because unintentionally miss something. Good morning. Welcome back. Season 6, episode 32. Looking forward to a good one today. Talking a lot about tax today, but not tax, about how tax works, but rather how we can solve the problem about not having all the information. And then based on what we do know, we sometimes give people the wrong answers, or they've gone to somebody else and they've have this problem and now they're coming to us or to you to come and help them. And today it's all about that. So I'm looking forward to a good discussion with my guests today from Gravitas Tax, who's Emile van der Spuy and Wouter de Witt. And I'll introduce them to you a little bit later. If you even need introducing to them, I might say as well. These two guys have been very busy in the last few years with their tool called Gravitas Tax. So excited to have a deeper conversation with them around that and show you how and what role that plays in financial planning and why it's a must-have for your practice. So we're going to get into all of that. But of course, we need some more people. I mean, who would just want to listen to us? Of course, we have Leilani back today with the FPI and Current Affairs. So happiness to have her back today and to hear what is happening in our wonderful profession. Then also we have Rudolph is back with Money, Meaning and Beyond today, unpacking the scarf model. It's a little bit late, Rudolph. Winter is now sort of passing, okay? So you should have done the scarf thing right at the beginning. But anyway, looking forward to hear that. And then we also have Kobus Kleyn back with the Advisor's Path today. Propulsioning it up. He's going the Advisor's Path to Explore, which is our theme for the year. Raise the bar and stay curious. So looking forward to that. Lene is back with some more quick announcements. Quick announcements are running out a little bit now, although there is still a lot happening. Looking forward to that. And then I'm going to chat to Wouter and Emile. Let me say a warm good morning. If you haven't said good morning yet, please do so. Okay, say hi not only to me and the guests and the segment host. Say hi to everybody else who's here, because that's why we are all here. Kobus were in early saying he'll see you soon, and he's going to see you very soon. Terence, good morning. Good morning. Elmin, goeiemorgen. Nice to see you as well. And Tax Space, of course, he's here. Ben is also here. Ben is Dioral. Good morning, Ben. Tinus, goeiemorgen. Nice to see you. Salome, good morning. I'm going to run through this very quickly. Winston, good morning. Nice to see you. Elna, goeiemorgen. Liana, goeiemorgen. There's me saying welcome. Dr. Rufaro, nice to see you again. Hope you're doing well. Rezan, goeiemorgen. Ek hoop het gaan goed. Francis, goeiemorgen. Lekker daar in Benoni. Neil, good morning. Lekker in Cape Town. Johan Blomeres, hoop het gaan goed, my maat. Mel, good morning. I think I saw some messages. I'll have a look. Ferdi, goeiemorgen. Nice to see you as well. Klisi, get that right. I'm trying to get it right, man. But anyway, good morning. Greg, good morning. Nice to see you. Leilani is saying hi to everyone as well. Mr. Grant Newland Nelson, nice to see you here. Good morning. Molly Boheng, again, like that streak. We must get a streak counter and see who's here every single week, right? And many of you are on that streak. So thank you very much for that. Albert, goedemorgen. Nice to see you. Lulu, good morning. I haven't seen you here before, if I remember. So good morning and a warm welcome. We've got Victor here. Good morning, Victor. Nice to see you. Rudolph is saying hi to everyone. And so is Andre Becker. Goedemorgen. Nice to see so many members here as well today. Anyway, ladies and gents, let's get the show on the road and hear what the latest news is. So, Lelani, over to you.
Yes, good morning, Francois and everybody, and welcome to the 26th of September of 2025's news from the FPI. So let's focus on enforcement matters and let's see what happened there. So in the case of Johanna Katarina Jansen van Rensburg versus Rinus Comfort Brokers, the tribunal has set aside the advisors debarment. Now, why am I honing in on this one? She was dismissed for dishonesty at her employer, but unfortunately, Comfort did not follow the process and the procedures as outlined in legislation for the Section 14 debarment. So what had happened by the time it got to the tribunal, they also said, we are dismissing the case and we are setting debarment aside. And that's very sad because here's a person who was asked to leave an FSP or a financial institution because of her dishonesty. But because they didn't follow the Section 14 process, the debarment was set aside. So I think this is a clear indication. If you are working with debarments, do not get confused between the different processes, because it is different when you dismiss somebody and when you then work with a debarment, and it's actually regulated by different pieces of regulation. So let's learn a lesson from there. Follow your process when you debar. Then a press release from the Financial Sector Conduct Authority, which came out last night. And they send these press releases at 1 a.m. So I suppose some of you can hear it literally for the first time this morning. So the FSA has published the names of at least 5,800 employers who are in arrears with the retirement fund contributions. And this is very sad. It is a clear breach of Section 13A of the Pension Funds Act. The arrears now total more than 7.2 billion, with nearly 3 billion owned in late payment interest and alone. So the bulk of the non-compliance stems from two of the country's largest retirement funds, which is the auto workers and the motor industry provident funds, which together account for more than half of the listed employers. The FSA has warned that this marks a 50% increase in non-compliance since December 2023. However, there are some improvements. A data cleansing exercise by the private security sector provident fund has corrected hundreds of errors in earlier reports. For employers of funds, the lesson is clear. Timely and accurate payments of contributions is not optional. Delays not only attract heavy interest, but also put workers' retirement savings at risk, and now reputational damage through public naming as well. Reflecting on the list myself, the majority of the non-compliant employers indeed comes from the automotive, and it includes panel beaters, auto body shops and repair centers. And then unfortunately also followed by the beauty industry, such as hairdressers and salons. And I also saw quite a number of municipalities on there. So that is quite sad. So the full list is actually on the FSA's website. Then breaking news. The Omni Conduct of Business Reporting, otherwise known as the CBR, there's some news there. The FSA has confirmed that the Omni CBR is being replaced and renamed with, and it's also now known as the Omni Risk Return, which will come out for public comment on 30 September. So the FSCA on Tuesday met with professional bodies and associations to inform us that name change is there, Omni Risk Return, and they took us high level through what the Omni RR will look like, and that it's indeed coming out for public comment on the 30th of September, which is Tuesday. They couldn't tell us exactly which time, but remember there's 24 hours in a day. So please, when that comes out, FPI will share it immediately with FPI members, and remember to give your comments to us or directly to the FSA should you choose, because if we don't give feedback now, it will come into place without your feedback. Now, it looks quite different to the previous one because it's based on the FSCA's IRS, which is not your Internal Revenue Services, but it is actually the integrated regulatory solution. That's what it stands for. So it's based on IRS. Then something for people who's in Johannesburg. I found that quite interesting this morning. And the headline from News 24 was, "Damn it, I'm going to do it." And because of the headline, I thought, what is this all about? So the story is Helen Zille is the DA's mayoral candidate for the city of Johannesburg. So Zille searched for a mayoral candidate before deciding to actually throw her own hat into the ring because she couldn't find a suitable candidate. So if elected, she will be the first person in the country to be the mayor of 2 big metropolitan municipalities. So let's see, maybe she's coming to Joburg. Then just for fun, have you ever wondered what's the top 5 things, or noticed what the top 5 things is what people do in their cars? So yeah, this is no surprises here. 48% talk to themselves. Guilty. 35% sing in karaoke style. Guilty. 28% snack. Guilty. 13% take naps. Not guilty. And hopefully they don't take naps while they're driving. A small percent, which is 4%, apply makeup while they're driving, with 47 individuals actually reporting that they gave birth in their cars. So cars are more than transport, they're private stages for all your life's moments. Then in closing, from the Financial Planning Institute, Francois, a quick reminder that registration for the last capstone course and exam closes on the 10th of October. And don't forget, registrations for the FPI convention are still open. The in-person seats are going very fast. There's only about 80 left, 80, so ensure your spot today. And if you missed it, the in-person one, you can still register online. There's no limit on online because online is in the cyberspace and it doesn't have any venue restrictions. But with that, Francois, wishing you a great Friday, and remember to stay informed, stay compliant, and stay connected with the FPI. Goodbye.
Thank you very much, Lelani, and definitely the capstone course. You want to do that? It's amazing. It's now like, what is this now? The third or the fourth cohort? I can't even remember. It's going so fast. But you've got to go and do that if you're planning. So next up we have Rudolph. So first off, thank you, Lelani. Appreciate that. And next up we have Rudolph with Money, Meaning, and Beyond. And today unpacking the scarf model. I've gotten get my scarves because I'm interested. Let's see. Yeah.
Well, good morning, everybody. And I almost started with Francois. Good morning, good morning, good morning, good morning. So think about this. When a client sits across the table from you, you obviously want them to be open and collaborative and ready to act. But often their brains is in that primitive state called that fight or flight response. So how do we, within a very short space of time, fundamentally rewire that initial conversation to ensure that they are in a positive and receptive, or what neuroscience calls a towards state instead of an away state? So welcome back to Money, Meaning, and Beyond. And we're going to move away from the psychology of financial planning into a little bit of neuroscience today. Because client progress only happens when our clients are receptive, collaborative, and open. So Dr. David Rock created the SCARF model, and it's the key to intentionally shifting a client's brain into this towards state. And essentially, the SCARF model is broken down into 5 key areas. And as we spell the word SCARF, I'll explain to you what each area means and what it is potentially threatened by, but also how it is replenished. So the SCARF model is the acronym, and the first letter of the SCARF is status. And the core client need in status is that they want to feel respected, they want to feel competent and valued. So obviously this could easily be threatened by the use of jargon, guilty, or by feeling that their financial knowledge is being questioned, somewhat guilty. But they're replenished, so moving away from the away state into the towards state, by mutual respect, acknowledging their past achievements, and by validating their existing financial habits. The C in SCARF stands for certainty, And the core need here is they want to know the process. They want to know the plan, and they want to know the expected outcomes, which is, I guess, a very reasonable expectation. That's threatened by if we're vague, or there's maybe the uncertainty of shifting markets. Who can relate to that? Or they're confused by these what-if scenarios that doesn't make sense. But they can be replenished and move from the away state into the towards state by clear strategy, when we set steady expectations, and by using some visual roadmaps. A is for autonomy, and the core need here is to feel a sense of control over their decisions and their financial plan. This is threatened by micromanagement, either themselves or by financial professionals, of their budget, or presenting a financial plan as, this is the only way to do it. There's only one right way, everything else is wrong. I know best and you don't. Not ideal. And then it's replenished by a collaborative decision-making process, offering choices. There's option A, there's B, there's C. Which one resonates with you? Which one would you be comfortable to pursue? And then also ensuring that the client drives that implementation pace. Are you ready to move on to the next thing? What is most important to you? Which of these implementation things that we're going to do to better your financial position do you want us to implement first? The R in SCARF is for relatedness. And here the core need is safety, being connected, and feeling that their financial planning professional has their best interests at heart. So this could be threatened by impersonal demands, so very cold forms, very transactional in nature, only ever discussing numbers, never the life that's represented by the numbers. But what are they replenished by to move them from their away state into this towards state? Genuine human connection and taking time for those non-financial check-ins, so vital. And then lastly, F, fairness. The core client need here is that the fees or the value and the advice that they receive is equitable and transparent. So it's threatened by arbitrary fee changes or opaque commission structures, sometimes done by the platforms, not necessarily the advice. So how do we proactively communicate that? But it's replenished by transparency and consistency in fee disclosures, clearly defining the value for the cost. So the funny thing about the SCARF model is this. When one of the areas is threatened, the entire brain goes into defense mode, goes into that away state. So if 4 out of the 5 areas, you're doing your best to put this client in a towards state. So if we look briefly at the SCARF, so you've acknowledged their status, you've given them certainty, you've allowed them some autonomy, and you were very fair in your approach. And you were very related in your approach. But when it comes to fairness, there's just this sort of, I guess, opaque fee structure, or they're not really sure how much you're going to charge and what they're going to get for it. The first 4 letters, SCAR, you did wonderful. The entire client goes into defense mode, and all of a sudden they're on the back foot because there wasn't clarity on the fairness. Spend a bit of time over the next coming weeks unpacking the SCARF model. It is wonderful how much it can add to our conversations and how it can add to how we engage with our clients to prepare the soil for a great conversation and a great client journey. I hope that was helpful.
Thank you much, Rudolph. Thank you very much. Whoa, what's going on this morning? Anyway, thank you very much, Rudolph. Really useful, really helpful, and definitely something that everyone thinking about, say, how can we implement that and learn more about that as well. So thank you very much for sharing that this morning. Next up, we have Kobus with the advisor's path to explore, raise the bar, and stay curious.
Hey Rudolph, and I thought my scarf was to keep my neck warm on this cold morning in Joburg, but now I have a different need for my scarf. In any case, it is great to be here as always. When I look at this year's propulsion theme, the word explore immediately connects with me because that is what our profession is really about. Exploration is not limited to a country or an adventure. It's about entering into someone else's world with respect and with curiosity and walking alongside them as they navigate their financial journey with us. It is not simply looking at statements or projections, but listening carefully to what is said and even more carefully to what is not said in between the lines. Every client we meet gives us an opportunity to explore something new, their dreams, their fears, their family situations, even the unspoken worries they sometimes only share when trust is finally built. Exploration for us is a privilege. And when it comes to great responsibility, it's important. But here is the truth. Exploration without raising the bar will always fall short. It's easy to explore in a casual way, to ask questions, to have conversations. But if those conversations do not lead us to push ourselves and our advice further, then we are not honoring the trust our clients place in us. Exploration is only the doorway. Raising the bar is what ensures the journey has meaning. To raise the bar means to never settle for being just familiar. It means we keep proving day after day that our role is not about selling a product or filling out a form. It is to offer advice that stands firm when everything else feels uncertain. It is to step into the difficult conversations when clients are tempted to avoid them and holding steady when they cannot see the road ahead. That is why we must stay relevant, as we heard last week from Richard Mulholland. And I would like to repeat his book title, Relentlessly Relevant, because relevance is not something we achieve once and keep forever. It is something we fight for relentlessly with every interaction, every review, every recommendation. Every time a client sits across from us or on a screen with us, they are silently asking, can I still trust you to lead me through this? And the only answer they deserve is yes. Yes, because we continue to raise the bar. Yes, because we choose to stay relevant. And then comes the third theme, curiosity. Staying curious is what makes exploration worthwhile and raising the bar always possible. Curiosity is not only asking prompting questions, but how we ask better questions. It is us wanting to understand not just what a client earns or invests, but will they make the choices they do, why they hold certain beliefs about money, and what values they want to pass on. Curiosity keeps us fresh. It stops us from becoming stale. It is what makes me open my eyes wider when I travel, whether I'm sitting in a cafe in Cape Town or working remotely from Hong Kong next week, somewhere abroad under my working from anywhere banner. It is curiosity that lets me notice how people live, how they adapt, and how they solve problems. Those lessons always make their way back into the advice I give. Curiosity is the spark that connects the technical with the personal, the numbers with the narratives, and the plan with the story of life being lived. Without curiosity, we stagnate. Without curiosity, we become predictable. And when we become predictable, we risk losing the trust that our profession is built on. Staying curious is not just good practice, it is survival. So, as we walk this advisor path together, let us embrace these three anchors. Let us explore not just the numbers on a spreadsheet, but the stories behind them. Let us raise the bar, not once, but every time we show up, every time we are called to serve. And let us stay curious, because curiosity is the antidote to complacency. I want to leave you with this thought. Exploration without purpose is wandering. Raising the bar without consistency is noise. And curiosity without humility is pride. But when you hold them together, when you explore with courage, when you raise the bar with intention, and when you stay curious with humility, then you remain relevant, relentlessly relevant to every client you serve and to the profession we all love. And my last words go to Wouter and Emile from Gravitas Tax, that's going to be our guest today. I've been using Gravitas Tax for the last 5 years, and no, they're not paying me to say this. It's the most wonderful tool that's kept me out of the Ombuds office and built trust with my clients. Thank you, Francois.
Brilliant stuff. Thank you very much, Kobus. And then next up, we have Lene with some quick announcements.
Mirror, mirror on the wall, what's the biggest updates of all? I'm pretty sure you don't need a mirror to tell you that, so that's what I'm here to do. Let's quickly jump straight into that. Good morning, PROpulsion family. I'm going to jump straight into our first announcement, which is Ascend, and it's going to be so much fun. There will be 5 keynote speakers, powerful panels, CPD points, all jam-packed into one energetic morning. So hurry, members, you get access for free with your membership. So all the information is on the platform where to register for that. And if you want to join us for Ascend, have a look in the description down below. There's a link that you can click to purchase your tickets on our website. And next up, we have Digital Lockdown Beyond the Buzz. Every month there's new tech, and with all the hype, it's really difficult to know what really matters. So Francois will be joining Michael Mulder from Innate to have a no-nonsense conversation about what's working, what's the hype, and where AI and automation actually fits into your practice. So that will be happening on the 23rd of October at 9. And yes, CPD points are in the works, so they will just confirm that once it has been approved. And you can head down to the description to hit the registration link and secure yourself a spot there. And then we've got Money Maestros on the 16th of October. Guys, it's going to be a high energy event where it's all about real conversations and fresh insights around having money conversations. So financial planners and advisors, that's happening on the 16th of October in Melrose Arch. And again, hit the description where you'll find the link, or you can visit the Money Maestros website. Sure, I was flying through that, and I guess that was the announcements for this week. Guys, please hit the like, share and subscribe buttons. It helps us out a lot, and I know that if you find value by being here, someone else most definitely will. So help us help you and them. So we'll gladly appreciate that. We are on a mission to build a very strong community of advisors to raise the bar. And with that, I think we are finished. And I will see you again next week. Have a great weekend. Bye.
So I'm pleased and excited to welcome our two guests from Gravitas Tax, Emile van der Spuy and Wouter de Witt. Both are certified financial planner professionals with over a decade of experience in retirement and tax planning, and together they've helped hundreds of clients retire and have built Gravitas Tax to support advisors with something that can make or break the retirement outcomes. Which does tax directive simulations. We're going to get into what that is. Emile and Wouter, welcome to PROpulsion Live.
Thanks, Francois.
Thank you for having us.
Good morning. I just caught you there taking a sip. I also need to take a sip of some water, Wouter, so that's fine. Hope you're both doing well, and warm welcome to the show. And I want to kick off. We've got, again, like a long list of questions and topics and things that I would like to discuss. and get your insights on. So let's get cracking. Emile, I'm gonna sort of start with you, and I want to ask, like, just in plain terms, right? Last night I was watching a video about somebody explaining AI agents to a 5-year-old, so, which was brilliant. So now I'm going to ask you the same thing to talk us a little bit through, what is a tax directive and why does it exist? I think people have got different views or different understandings around, but what is the purpose of that? And then also, where do we as advisors and planners encounter that when doing any kind of retirement planning?
Okay, yeah, perfect. I think that's a fantastic starting point. So I think most advisors are familiar with a tax directive. So a tax directive is issued usually on transfer or when a client cashes out funds on a retirement fund. That's issued by SARS, and that's kind of the way that they track the path of how much clients has withdrawn and previously taken. So that's the normal tax directive. So the space we play in is tax directive simulations. So that's very similar to a tax directive. Instead, that we provide the tax directive simulation to the advisor upfront, where that actual directive is kind of provided by SARS at the end of the process, where it's already a bit too late. In Afrikaans, we always say the coolest deur die kerk. Then the tax has already been deducted. The client might be in an uncomfortable position because the taxes might be a bit more than we planned for. So that's where the benefit of a tax directive simulation comes in. You actually get that tax directive simulation upfront when you're sitting with a client. You request that tax directive simulation, and you get the same information that's provided on the actual tax directive upfront. So you can actually use that, because that's a vital step in the retirement planning process. So you can actually take that information upfront and advise with that information in mind.
Thanks very much, Emile. Yeah, I guess. You talk about like the information that is necessary for, that's the same as when you would apply for a formal tax directive, right? But that's usually handled by the administrators of the fund, So when you submit your forms, then they take care of the tax directive. So Wouter, what are maybe some of the first 3 things that you gather? One, to sort of decide, do I need to do a simulation? And then what information is required to be able to do that simulation?
Yeah, thanks, Francois. So it's when we do retirement planning, it's simulations is obviously very important, because that's when the client starts making big decisions like paying off debt, planning the income for the next 20, 30 years. So that's important to get that simulation correct perfectly, because a lot of clients wants to pay off some debt and say, okay, this is how much they need. So that is important to gather the lump sum needed, because then we normally work back from that to say, for example, okay, a client needs R1 million. Then we'll go and see how much tax is deducted, if any, and then circle back to say, okay, this is how much you need to withdraw from your retirement funds. It's not only applicable on retirement funds. You can, clients withdraw, if they withdraw from their preservation funds, 2-part savings withdrawals, as well as if client passes away, you can see the simulation to plan and update the state duty. There's lots of new exciting legislation on that front to use simulations to better your advice, and also just to stand out a little bit, because especially the retirement space is very competitive. Most clients, they go seek 2 or 3 opinions when retirement planning. So you must try and do something just to be ahead of your competitor, but also providing good advice to the client. So many times we find that advisors don't do a simulation, and then it's over kind of. So the client loses that tax money. He has to plan, he has to do other sources, he has to increase his savings or his monthly income to try and recoup those. So it is a difficult process, and that's why simulation is so important.
Yeah. And Emile, just on that note, clients, once it's done, like Wouter has said a couple of times, once it's done, right? There's no going back. And I think that's what we think we still have a chance to say, oh no, there's an IT 88, which means that this client owes SARS money and nobody knew about it, but now SARS knows there's money coming, and now they issue an IT88. And once that is issued, that has to be deducted as well. So there's no going back. And how often do you see that happening? Because obviously, I mean, there's a reason why you guys came up with, isn't there a better way? Can't we catch it before that happens? So what is the story behind, was there a specific event? Was there a couple of events that led to that realization and saying, Wouter, Emile, we've got to do something?
Yeah, 100%. The need was purely identified in our own businesses. As we started to grow our business, we started to specialize a bit more in retirement planning. And when that happens, obviously you deal with a bit more INET with clients. And we just felt it's such it almost didn't feel right just to have that discussion with the client and to be solely dependent on what they tell us with regards to previous withdrawals. And I'll unpack this a bit. First of all, clients, I mean, they don't have an understanding of what is regarded as a withdrawal. We've had some funny situations with clients telling us, yeah, they've never been retrenched, but they had a golden handshake, which sounds funny to us maybe as an advisor. But if you think about it, clients don't understand that it's not something they specialize in. It's not something that they are expected to know. So it just felt... it felt very kind of the water is a bit muddy in terms of being solely dependent on what the client tells us and jotting that down in our record of advice to safeguard you as the advisor. But that at the end of the day didn't solve the problem. If tax is going to be deducted that we didn't account for, the client is the one that's being negatively influenced. We as the advisor are in a comfortable position because that's our role as the advisor to provide that information and to understand how these things work. And as Wouter mentioned previously, the retirement space is so competitive. Clients seek multiple opinions. There's a massive focus on fees. We still feel that there's not enough focus on the tax. Because if you plan for the 550 tax-free, client needs to settle debt. And all of a sudden, because of our IT88 or because of previous withdrawals, they only receive maybe 400,000. Your whole retirement journey starts on the back foot. A drawdown might need to be adjusted. So we just felt it's such a vitally important part of the process, of the retirement process. And clients hopefully only retire once. So you really need to get it right. So that's when we started exploring in terms of tax directive simulations in general. We felt the solutions in the market were quite old-fashioned, call center-based, paper-based. We know as practicing financial planners, we want information accurate, efficient. We didn't want to duplicate a system. So we really tried to build something that's simplistic and just gives you as the advisor the information in an accurate, efficient manner, so you can provide the best advice to clients.
And Wouter, thanks, Emile. So, I mean, here's a question, Wouter. So, would it be best practice, okay, to just do a simulation every time a lump sum is going to be taken from there? Should I just go and sit and do the simulation and just pick a number and just see what the simulation says? Or should there be planning and then a simulation and then adjustments and then another simulation? Like, what does that journey look like from a practical point of view for someone? What would be best practice for somebody using this sort of process?
Yeah, thanks, Francois. And Emile and I have had that debate a million times. And I think what we try to do in our own practice is almost do that right in the start of the journey. So when we get a disclosure letter or a phase introduction letter, we try to get our records up to date so we can do a simulation as well. Because even if the client's not retiring, it's a nice relating factor to a client to be able to tell them, look, I'm going to look into your tax as well on a more light version than go looking at RP5s and SARS e-filing. Because it's related to retirement and withdrawals and retirement funds, but because, as you said earlier, it displays an IT88, it does give you a quick snapshot of, okay, there might be something, Mr. Client, let's go look at it. Because as Rudolph said, sometimes our advisors, we miss that boat completely and we need to bring it back to we can help you, the client. We're not there just to make a fee, and we really want to help these clients. So we almost suggested every time for a client, or at least every time in the beginning of the process when there is a withdrawal event, retirement, death, retrenchment, and even now savings spot. And Emile always uses this example where savings spot is still relatively new, so you initially would just take it to get access for financial situation, etc. But now it's becoming part of a tax planning tool. For example, Emile did a situation with one of his clients where they needed money for a wedding, and then he had to look at his current preservation fund or his current savings pot withdrawal at his employer. And then because they taxed on different tax tables, Emile ran both simulations to actually go check which is the best for the client. Now, that is advice. That's how you deliver and almost justify that you as a financial planner can give good advice. And also, if you compare us, for example, to, because sometimes from our industry does still get a bad rep a lot of times. So it's these type of things that we can do to increase our value to clients, that we become more of a professional industry, like accountants and tax specialists and lawyers, etc., where they almost might feel a bit more professional, and that's the way we want to go. And we'll give you a bit of more insight later on what we've done with the Financial Planning Institute to try and get that right.
Yeah, and we'll definitely get back to that, because that is an amazing benefit that is actually offered to the FPI members. So if you are FPI members, stay tuned. Let's talk about two-pot. You were talking a little bit about the savings component, like it was called a pot. Now it's a component. Like I can't keep up with the names, but it's a different way that the tax works from that perspective. And I think there's also, I mean, we've done so many training on that with so many people over the last 2 years. I mean, even before it came into law, and there is continuously confusion around specifically the tax. And now there's a vested component, and there's a savings component, and there's a retirement component, like all of this. So here's a loaded question now. Wouter, I'm going to ask you this question. So if you think about that, can Gravitas Tax help in the sense that I don't have to know anything. All I want to do is get a number. So I want to know that the client wants to withdraw, is planning to withdraw X amount. We run this, but I don't need to worry about exactly the technical ways of what happens. What can I do with a vested component? What can I do with it? Like, does the tool replace the need for that knowledge, is basically my loaded question.
Yeah, that's a great question, Francois. And I think it takes it back to how we did it in the past. So before there was simulation systems, it was those manual calculations that we had to go look at either on the employee or GPF type of funds, Formula C, or this amount plus this table, etc. So it already just takes out all of that. You don't have to do that calculation. So your calculation is accurate every time. So that's important. Currently, the system does sit on a savings pot on one component, as we know that it gets taxed on the marginal rate, and then the vested component that sits in the normal retirement tables. So currently you have to draw simulation on both, but that's actually a fantastic idea. We will investigate that to try and blend and help with advice. We try not to really give advice because our client is advisors, and in the end they have the relationship with the client, so they know better what to do. So we just try to give them the information, empower them, so that they in end can do what's correct with the client, because they have the relationship. And we're very big advocates of not steering too much, because the advisor knows the client best. They know the full picture, and they see all the chess pieces on the board, and they would know what to do. But that is a good idea that we will definitely investigate, and I think that's maybe even something that me and like Gravitas and TaxSpace can collaborate on, because we obviously know your tax tool is very does those type of things. So that's maybe something that we can build for the industry together.
Yeah, for sure. And then Emile, just from an admin angle, right? It's one thing doing the simulation; it's another thing getting the transaction through. So, are there any specific best practice, like again, like you have like a checklist or steps that you tend to follow to ensure that, look, it's one thing to ask for the simulation, we get the simulation, but then we want to make sure that the transaction, if we decide to go ahead at that point, that goes as quickly as possible, because I know there's always some delay on a SaaS side or whatever. Like, do you have any advice from that point of view?
Yeah, so I think that goes back to one of your previous questions as well, in terms of, does Gravitas Tax only assist with the simulation? So I think that's another space that we play in, is actually first of all the compliance side. We've seen about 70% of our simulations requested by users are for retirement planning. So we definitely see it as a value add specifically in that space. But then the other 30% is comprised of pre-retirement withdrawals from either the savings pot or the vested pot or death simulations. And we see that more on the compliance side, because 9 times out of 10, if a client's withdrawing pre-retirement from a preservation fund, they might need funds. And that just safeguards you doing that transaction, because that's not as much planning to say. So it definitely plays a big role on the compliance side. And then also a big value add, especially on the retirement side, is the first step when you upload a client is adding the tax number and the ID number. So we actually cross-reference that with SARS with what they have on record on their side. And that's a very important step, which causes the actual directive to fail if the client's details are not up to date. So that's something that not a lot of people actually know, is that SARS actually have two systems. They've got their normal e-filing system and the directive side. So sometimes it might look like the clients have sent us numerous occasions, they've sent us a screenshot of their e-filing profile, but all of the details seems to be up to date, but then it might not be up to date on the directive side with an old ID number or a different tax number. And that causes that actual directive to fail, which, especially when the client is waiting for retirement income, I mean, we take a lot of time to meticulously plan that, to ensure that the client receives the income and the correct stage. Obviously, you don't want them to sit a month without income. And that, when happens a lot of the time, that actual directive then fails, ID tax number is not up to date, and that can take up to 21 days with SARS to get that information updated. So with the simulation, as Wouter mentioned, we do the simulation up front, and that will allow us to identify that upfront while we still in the initial stages of the planning process. Documents still needs to be submitted, so the client's got more than enough time to chat to the accountant, chat to SARS, to make sure by the time we get to that actual directive stage, that's actually a seamless process. So essentially, it goes back to the simulation gives us everything upfront that we usually get on the back foot on the actual directive, where we've still got time to plan and fix and correspond with the client. We're not in a panic state to kind of alleviate that stress on us as the advisor and also on the client.
Emile, just a quick follow-up question. Is there a limit to how many simulations I can do for a client, or is there a limit on how quickly I can, like, if I have to do, let's say I'm sitting there doing planning and I want to do simulations, like, or is there a timing limit? Is there a how often I can do it, how many I can do, etc.? Are there any limitations in terms of that?
So no, not at all. And I think that's also one of our unique selling points. A lot of our competitors out there, or the providers that offer tax directive simulations, they'll limit you to 1 or 2 simulations specific to the funds that sits on their platform. So let's use an example. The client's got 10 million to retire with XYZ, maybe 9 million in a pension fund, and 1 million with a provider that offers tax directive simulation. They'll only allow you to do a simulation for that amount in the preservation fund. So a simulation on R1 million, if the client's got 10 million in retirement, is not going to get you that far, because we need to have that holistic approach. And that's one of the core foundations we built Gravitas Tax on, we wanted to have that independent view to ensure that we can give accurate advice. And with that being said, you can also run 5, 10, 20 simulations. If you request it now, it takes about 2 to 3 hours to come through. So all of them will come through as soon as you've requested it. If you want to give the client different kind of options, a lot of our users like to do that.
Yeah. Awesome. Thanks, Emile. So, Wouter, there's always some, I think when we think about lump sum tax, we think about the typical thing. Somebody's retiring, somebody is they resigned and they're going to withdraw their funds, or they got retrenched, etc. And those are the main cases. But there's also some other things that often happens and that people ask our advice on. Some of them being divorces, some of them being I'm emigrating. So can you do things for that? And then also living annuities. When somebody passes away, is it possible to also do simulations on living annuities for death?
Yeah, thanks, Francois. Yeah, that's a very good question. And basically the answer is yes to all, because as we know, it basically falls on 2 tables. It's the smaller table, so withdrawal table, and the retirement table. And as we know, legislatively, all of those withdrawals fall into either one of those 2. So yes, the system accommodates for all of that. We don't go, say, per event, like, okay, divorce, etc., etc. So again, we allow the advisor to give the advice and to see which of those options it falls into, and then do those retirement withdrawals. So that's the quick answer to the question. It is important to kind of play with the system a bit. You'll get used to it and see what works and what doesn't work, and when to use a savings pot and when to use a public sector calculation, etc., etc. So it's very, very simple, and you'll get into it very quickly. There's like 5 inputs, and it takes you, I think, a minute to do a simulation, not even. So that's important. And it's also important to touch on the excess contributions when it comes to estate duty or estate planning, rather, and as well as income tax returns or income tax on your living annuity. So what I mean by that is, let's say, let's take a real example. One of our advisors, they were at a retirement deal for MD of a company, 25 million rand in the retirement fund, more or less. And because of the individual's high tax bracket, they were adding much more into their pension fund over the 350,000 annual limit, and their excess contributions built. So when that individual retired, he actually had 4 million rand in excess contributions. So if you draw a simulation like that and you see there's 4 million rand excess contributions, it just enhances your planning and your strategies that you can apply. For example, the client can take everything out in cash. You can draw that as a living annuity, afterwards tax-free, or a life annuity, just out of the planning perspective. And because we're in a very competitive environment, it also sets you apart from the competition. So the specific advisor, there were 3 of them up for the same MD. It's a big client, but obviously the advisor using Gravitas Tax got the deal, if you want to say it like that, because he could offer better advice. It's not only just the options on the 4 million, but what they did is they, for example, moved it in a voluntary purchase annuity, lowering the effective tax rate, so he could withdraw a much better income with lower tax, because using all the information that sits with SARS, where we previously didn't have that information. I went through that very quickly, so I hope that makes sense.
Yeah, completely. And it does again go to, like, knowledge is power, right? So, or information in that instance is very, very powerful. And also, I mean, imagine, because that information is like, it is available. But one, you don't know if it's the information that you have, whether it's up to date. You have to go and collate all that information. And here, like, you do it. Like, so when you do these simulations, Emile, do you have to send any supporting documentation with the simulation, or is it purely like digital? Here's the tax number, here's the amount, boom, you send it off. Like, is there anything needed to go with this, the request for the simulation?
Yeah, so very important question. So consent is obviously very important in terms of the disclosure letter. So that's the only requirement we ask for on our side. We do audits on our side to ensure that everybody is in line and requesting the information with the correct authority. And then it's actually funny that you mentioned that with regards to simulations, it's just one of those things that you need to really do upfront, as Kobus is mentioning here in the comments. Even if a client says that they haven't previously taken any funds, it's just always important just to rather have that simulation than not to have it.
Yeah, brilliant. If we think about, like, I just maybe want to reiterate this a little bit. I mean, you guys can decide actually who wants to answer this, right? So we have touched on this during the conversation, but I just want, for clarity purposes, if we think about the entire advice journey, right? When it comes to somebody either is going to retire or they are going to access funds from a retirement fund, or somebody has passed away and there's funds payable. In that journey, can you talk us just maybe through, like, from the beginning, just right through, just high level, like, what are the steps, what are the documents, what are the sort of things that you look for, and how does, doing a simulation then, just to reiterate, then add that value? Because I think what's very important here, Wouter, is what you mentioned, is that it sets you apart because you have access to information that the competing advisor or planner does not have access to, because they're not maybe using the same system, or even if they've got the system, they maybe didn't use it because it seemed like, oh, you've never made a withdrawal. So that kind of thing. So I don't know, like, which one of you would want to. I'm just going to throw it out there and say, who wants to take us through that process?
Yeah, I can jump in there. I think the process stays 90% the same. I think what the tax directive does, and it's actually quite a simple answer, it just gives you that reaffirmation that the options that you're discussing with the client is actually what's going to happen. So typically you would go see the client, discuss their requirements and ambitions for retirement, see what funds they have available. Then the first step for me would be when I get back to the office, and I think this is where it adds a lot of value, being a practicing financial planner ourselves and using the tool. I think we're constantly trying to improve what we've got. As Wouter mentioned previously, we're very open to feedback and open to suggestions what we can improve on. But yeah, when I get back to the office, I'll typically request the simulation, and that kind of the outlines of the picture would be there. But I think what the simulation does, it colors that picture in completely, in terms of, so if we access funds over here, this is what's going to happen. If we access 550, what needs to happen next when that simulation comes back? It might give us a prompt to say that there's an IT88. Then I know my next steps would be to speak to the client to go and check how much that IT88 is. Is it 100 Rand or is it 100,000 Rand? Because that's going to significantly change the plan. And as I mentioned, then we're still in discussions with the client. We're still deciding on exactly what we're going to do, and we can plan accordingly. So I think that's in essence, it's a tax directive simulation. It's a very simple part of the process, but it's such a vital part of the process. I think it just gives you and the client that reaffirmation that what we are planning for is actually going to happen.
Yeah, brilliant. Wouter, just to maybe get us to the end, I know that you recently launched a member benefit for FPI members as well, simply because I am a member. Unfortunately, I'm not a practicing person anymore, but you want to share a little bit about what that member benefit is and how it works?
Yeah, thanks, Francois. And yeah, so in a nutshell, we partnered up with the financial planning institution, or FPI, to give members additional value. So our agreement is that all certified financial planners that are FPI members can use the system for free until the end of the year. Again, it's trying to empower our advisors and getting them to use it. And as well as give that benefit to the client, because we are really trying to get the industry more professional and getting the industry more access to information so that we can give better advice. So we're trying to make it free for in some way, and this is our first step in that we're going to make it free for the CFP FPI members till the end of the year.
Brilliant stuff. Just like that. Fantastic. Wouter de Emile, thank you very much. If people want to learn more about Gravitas Tax, for those who are not using it yet, what would be their first or next step to get started?
Yeah, I think easiest, reach out to us, can reach out to either one of us, reach out to our hello@Gravitas Tax email address, or you can simply register on the website. We do offer 1 or 2 free simulations for the guys just to test. As Wouter mentioned there, I think we are trying to kind of get the industry on board. Tax Directive simulations is a relatively new concept. It only came into effect in 2019, so there is still a massive learning curve. And that's why we appreciate partnerships like with yourself, Francois, with the FPI, advisors like Kobus promoting us. I can see here, I think it's Neil in the comments as well, saying he's doing a simulation as he's watching this. I think that gives us a lot of confidence, but there is it's still compared to how old the industry is, it's still a relatively new concept. So there's still a lot of work to be done.
Yeah, awesome stuff. Gents, thank you very much. Really appreciate the time, and thank you for joining us, and well done on building a fantastic product. And yeah, I would have wanted to ask what else are you busy with, but we'll keep that for the next one because I'm pretty sure you're always up to something. But just thank you very much for spending your time with us, and thank you for being friends of PROpulsion. And yeah, we look forward to seeing you again soon.
Thanks, Francois.
Thank you, Wouter.
Fantastic. Thank you very much. And thank you for the comments and all of that. People are saying, well, yeah, using it as you're listening to this, and sort of, I know that the experience is great with Gravitas. I know that the information is extremely valuable because I've dealt with so many issues in the past, and there's nothing you can do. Once it's done, it's done. So having a simulation before you do anything is best practice. It is worth it. And you would expect to pay thousands and thousands of rands for something like this. It is this. Like that's not the case. So it's very affordable, but extremely valuable. So go have a look at that. So my guest next week is Samantha Sparks, and I'm really looking forward to talk to her. She have once navigated divorce and single motherhood with deep financial fears of her own, and today she's helping with personal financial coaching. And she helps women build confidence, clarity, and practical money skills. So I'm looking forward to talking to her about how does she do that, how does she get into it, and what is it that that we can all learn from her journey and what she's doing. So looking forward to that next week. But until then, stay safe, be blessed, and prosper. You know the story, and please stay curious and continue to raise the bar. Thank you very much for being here. Thank you for liking and subscribing, and we'll see you all next time. Love you lots.